We made massive changes to the portfolio last month after this guy decided to retire for good. I won't rehash the painful details here, but long story short, I'm done working and we need more cash to pay the bills. So yeah, big portfolio moves, all in the name of cash flow. And yet, we smashed our all-time high. I'm guessing that your portfolio is hitting new all-time highs too in this wild market. But let me ask you something. Are you enjoying the ride? In this video, we'll look at why my portfolio is firing on all cylinders, but more importantly, why I'm loving life right now. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please deck that like button, subscribe if you haven't already, and drop me a comment below with anything that comes to mind. You know what time it is. Let's grow. Enjoy the ride. Growing my portfolio over the years has truly been one of my favorite parts of life, but the bumpy ride along the way can make you lose respect of everything else that matters. As many of you longtime viewers know, I end most of my videos with money is overrated, freedom is not. And I really do mean that. Building wealth supports the things that matter most, like providing for your loved ones, but don't forget to enjoy the small wins along the way. Watching my 5-year-old son play bunch ball soccer and scoring his first goal and smiling ear to ear, that is genuinely worth millions to me. And even within investing, hitting 10K, hitting 100,000 or a $500,000, these are huge milestones that deserve to be celebrated. All I'm saying is that we shouldn't pause our joy until we hit some arbitrary end goal. Enjoy every step of this journey. I want to spread positivity and joy on this channel, and not the fake performative positivity that the internet loves to push. I'm talking about doing what makes you happy, feeding your soul with what actually matters. If you build a well-balanced portfolio, the money will follow over the decades. I promise you that. So just don't forget to appreciate the people and the things that you love along the way. Don't get caught in the stress of the rat race. I totally get it. Work hard, but maintain perspective. Now, on to other things. How about that red-hot portfolio of mine? Portfolio overview. It's time to pull up the portfolio tracking spreadsheet that ties everything together. This sheet's out there for anyone to use, so simply save a copy and make it your own. Plug in your information. Link in the description below. It's in Excel and Google Sheets. We're starting out here in E-Trade, where I often do, my favorite broker, where we keep the majority of our assets. This is our taxable brokerage account, my 3 former 401ks, which are now a traditional IRA, and then both of our Roth IRAs are out here in E-Trade. And I've been slowly working on converting some traditional to Roth, but we'll really hit that hard when the wife retires. And we're comfortably in that 10 and 12% tax bracket. Fill those things up. You can see that things are looking more simple than ever, and I love it. And a quick note, if you watched last month's, I explained all the extreme changes, why we're going high income. I don't want to rehash that every time, but what I will say is I did end up going with all QQQI instead of the split between GPIQ, the Goldman Sachs NASDAQ, and this NEOS one here. And I did that because QQQI pays what is almost 100% return of capital, anywhere from 95 to 100%, so I will see 0 taxes on these dividends in the year they occur. They reduce the cost basis and become long-term taxable gains later on, and it just gives a lot of flexibility. It actually has me putting a pause on my Roth conversions. We're right at the end of the 12% bracket, maybe up to the 22 some years, and it just doesn't make sense to convert when I get tax-free money now to help pay bills, and we'll hit those Roth conversions hard again after she retires, hopefully in 4 or 5 years. And I did mention this last time, but 100% of QQQI and IBIT are in a taxable account, and 100% of SCHD and VGT are in the traditional or Roth IRAs. Someday, all Roth IRAs, working on that journey. So there's no half and half anymore like SCHD used to be. We have IRAs for those two, and we have taxable brokerage for IBIT and QQQI. And then this SWPPX is my nephew's, and this will be out of here soon because he is turning 18 and he will get his own account. Now that I summarized all that, let's quickly dive in. We still have our 15,049 shares of SCHD at an elevated 26.40 per share. Again, I've moved this all around twice. This is not my real cost over the years. I've made a lot of money on SCHD, but it is what it is now after all the movements recently. And it's worth $402,560. And then our QQQI, our new position, all in taxable account, we have 5,650 shares, and that's at an average cost of $54.68 for a total of $314,000. And then the VGT in those IRAs were down to 300 shares. And I explained the shaving last month of all of my growth ETFs. I won't go into it again. I'll just quickly say that QQQI is QQQ essentially on the underlying holdings. So it is a growth ETF, quote unquote, with an income play. So other adjustments were made to keep things in balance. Those 300 shares of VGT at an average cost of $228, that's wild, are worth $238,000. And then our IBIT here. Now this one, I have a little update on this one, I think. I'm always on the fence of how to weight IBIT and Bitcoin in general. Do I believe in it? Do I not? I'm torn. I've done really well on Bitcoin itself, doubled multiple times over the years. And then IBIT, since I've moved to that, you can see we're up 74% here. We have 1,000 shares at an average cost of $35.80, and it's worth $62,300 even. Now with IBIT, I was thinking of capturing some gains, and my tentative thoughts are when it hits a value of 75,000, I'm thinking about shaving off 25,000 and putting it into QQQI for more cash flow, but always keeping at least 50K. And then if it gets back to 75K, so if it goes up quite a bit again, shave it down to 50 again. I'm considering that because it's getting a bit high at 4% of the portfolio. I don't know if I'll use that rough rule, but something like that will be coming soon. But when you put all this together, you can see that the total assets here are 1,021,000. So we're comfortably over 1 million. And the total unrealized gain is way down because we recognized so many gains recently, but it's still over $200,000. Oh, and I forgot to mention, you probably noticed that VMFXX, my cash, which I've long time had in E-Trade, is not here anymore. I completely brain farted telling you about that. And then you can see I basically have no cash. It's just a little odds and ends in the accounts that I couldn't quite buy a share of. But what I do now is I moved all of my cash over to Chase, where I do my banking, JP Morgan, and I have it in SGov. I open an investing account. I say that in quotes because I just have all SGov, like cash essentially. And it just makes it easier to move cash to myself, to my checking, my business checking, things like that. I'm all cashed up in Chase, and we'll see that on the spreadsheet later. So I did get out of the cash game within E-Trade, but I still have all of my core investments here. With all that said, if you're not asleep by now, let's pop over to Seeking Alpha. And here we are viewing all portfolios. Now, all the E-Trade stuff that we just talked about is integrated into this, along with everything else. And at a high level, before we dive in, I like to keep my ETFs on one group so I can see at a glance on the phone app or here on the desktop. You can see that like on Friday, I'm recording on Sunday. I like to do it when the market's closed on these things. I was at 0.46%, and then I have VU separated out just to see how I'm doing against the market that day, and it was up 0.29%. So the ETF mix won. And then the HODL factory, it had a rough one. But I also like to see how my individual stocks with my YouTube money in M1 Finance is doing. That's just a little context here, but let's expand. And I won't go into depth here. You'll see the exact same shares of SCHD, QQQI, VGT, and IBIT. Now, the one new guy here within this ETF section is VUG, and this is our HSA holding. It's the best offering there. And we have 95.5 shares at an average cost of a pretty nice $292 a share. You can see we're up 70% here, and our total value in the HSA is $49,169. Very nice. And then the only other holding I haven't told you about already within E-Trade is VU. And this is my wife's 401k. We put 100% into the S&P 500 there. It's up to 862 shares with a total value of $540,000. So that one's done very well. You can see it's up 50%. She's been at the company for 15 years, but we didn't move it all to VU until 2022. So really, she's done extremely well considering we're still maxing it to this day and getting the average cost up as we continue to invest. So we're very happy, as most people are, let's be honest, over the last 100 years with the market. And then the HODL Factory, my individual stocks, we won't dive into that on a video like this. I have a separate series for that, which I really need to drop an episode for if anyone out there cares about my individual stocks. And then cash is nice and cleaned up. You can see I still have it as VMFXX. And that's just because I can mark it to the share, to the dollar. I don't have to mess around with fractional shares. Technically, this is in SGov now, but it's all the same. I just update it every week for the total amount. And we're at 74,221. And that brings our grand total to an all-time high of 1,711,156. And you can see that this will match almost to the dollar, the spreadsheet that we'll go to right now. And I'm starting here on the portfolio tab. This is a simple tab that needs to be updated once per week. And I've mentioned this in past videos. I don't have the shares as a column. Technically, these could update themselves more. You can use the stock function within Excel and have it update per the current price. I like to punch them in once a week to see the changes. I'm just weird like that. So you can make this more efficient if you want, if you're following along. And so all I do is take this Seeking Alpha, in my case, that's my aggregator where I get my source from. I take those numbers and I just stick them in here in the spreadsheet real easy. VU is that value, SCHD is that value. And down the row, it takes 2-3 minutes a week maybe. And it just totals them up here and you can see it's about the same as we just saw over in Seeking Alpha at that 1.711 million. And then this tab's information here will help populate the allocations tab. And this one's cool because you can see what percentage of your portfolio each holding is individually. So VU, SCHD, QQQI, you can see their relative percentage of the portfolio. And you can also see by type. So VU is my only cornerstone and it's 540,000. So of course it's gonna match that. SCHD is actually my only value. So same concept. You can see 402,000 of value. And then I have QQQI as a cash flow and VGT and VUG roll into growth. And then of course the cash is cash. Bitcoin is IBIT. So they're going to be the same. And the HODL Factory is the HODL stocks. So really, geez, I just realized how simplified I've gotten over the last few months. When I reduced my growth holdings, I liked a variety of growth ETFs, QQQM, SCHG, VGT, VUG over the years. I don't mind the split dollar overlap, but when I went heavy in QQQI, I needed proportion more value, and that's where I got rid of all the small positions, even though I still really like them. And my rules over here with allocation, so the cornerstone VU, I think it's fine up to 100%, truly. Like if it's your only holding, I mean, of course you want cash on the side. I mean like of your equities, like of your actual investments. I think it's fine to have anywhere from 0 to 100 of VU. And then whatever you don't have in VU, you want a pretty nice balance between value and growth. You can see I'm heavy in value at 23.5 compared to growth at 16.8. And that's because I know my cash flow with QQQI is very growth oriented. So I'm not fooled by thinking value is higher than growth. Technically, I'm probably growth heavy here, even though this one's a bit of a hybrid. I don't mind the balance. And just for my strategy, I don't know if I've said this in a while, my taxable account, I reinvest into QQQI and send some to cash because you can see I'm low in cash. I've made a lot of moves lately when I decided full retirement was for me. And cash, I traditionally have at 10% and is way down at 4.3, and I'm slowly going to replenish that. Not up to 10, but much higher than it is now. And then Bitcoin again is at 3.6. I think I'm comfortable anywhere from 2 to 5% and still working on the profit taking strategy. And then the HODL, my YouTube money, the HODL Factory stocks is 20 individual stocks that I hold if you're new here. And I do have a separate series that details some of the holdings, is at 1.8%. And also I should mention, I have a free spreadsheet in the description below if you want to see what I'm holding right now. Full details updated weekly. You can see on our snapshots tab, this is just a weekly snapshot. I just take that number, literally a copy paste from that portfolio, that first tab, into this snapshots tab, and we're at an all-time high. Anyone highlighted as an all-time high, and they've been rolling in lately. You know, you can see the big gap of not having an all-time high. And let me show you an even bigger. I started tracking these snapshots in 22. I've done the spreadsheet a lot longer than that, but I thought, hey, I might want some history here. Hit a milli, thought I was a big deal, you know, puffed my chest out a little like, yep, I'm the big dog on campus. Never mind. Okay, ouch. Okay, I face fell on campus. And then it kept going down, and tell you what, I didn't hit another all-time high until just over a year later. During these times, I was cost averaging in, not selling anything, remained a buyer, and you zoom out and you see today. And that's how it works in any market. We'll crash again eventually. We'll crash hard. This could go down to 1 million. It could go below. I'm just gonna keep on buying, and you should too. And then of course, our value chart here. This is a pivot chart that updates automatically when you refresh the data. But you can see the blue bar is 22, orange bar is 23, green bar is 24, and purple bar, ooh, the 2025, and it's been dominating. So this is just a nice one to zoom out. You know, you're down 2% that day, you're seeing 20K red or whatever percentage makes sense for your portfolio. It hurts, but then you realize, you know what? This purple bar is higher than this blue bar. And if you've been doing this for years, it would be this purple bar is higher than some bar way down here. Point is, when you zoom out and chill and keep on buying, you will win this simple game. And then I can't skip the last tab, all the data we put in, which is really only this tab and this tab, frankly. So it's not a lot of manual input. This is mostly automated. It all rolls into the projection tab. So here you can see my contributions that I make, and that is the monthly contributions. And then this investments is pulled directly from that value from the other tab. And we're at that 1.71 million. I assume at 8% growth, 2% below the market average over the last 100 years. Again, this doesn't have inflation. These are nominal returns, not real. And then I just have some thresholds marked. But what I have here is my retirement calculator. And you can see our goal is $3 million. We've been tracking this thing, actual data, for 3.8 years. Our actual lifetime CAGR, no assumptions here, what's actually happened from the first entry to the most recent entry is 17.75 annualized return. That's not bad. If this continued, and that's a big number, it'll probably go down a little. We have 3.4 years until my wife gets to retire, and that would be on 4/9/2029. So these are always moving, you know, say it crashes a little, you go down to 1.6, this might go up to 3.9, whatever. So it's just a real-time assessment of what's happening. I love it though, because again, there are zero assumptions in this data. It's just fun to see not only the investing CAGR, which ours is probably 15% or so. I have beat the market by quite a bit over 15 years, but it also gives you credit for not wasting money and saving extra and getting raises and being smart with bonuses, because everything you do rolls into this lifetime CAGR. It's not just investing. This is just the total number versus the total number. On to the section that is by far and away better than ever. Dividends received. Oh baby, the cash was flowing in October. Check it out. Oh boy, is this thing looking juicy out here in October. So we're on the dividend tab, and you see here's our dividend table, data over the years. Here's data slicers if you want to see certain sections of time. Excel is pretty cool how you can really work these pivot charts. But what we're interested in right now is our October dividends at $6,864. That is quite a bit more than the $3,200 last year. But let's open this up because we've had some serious changes. You can see last year we had a big chunk of JEP-Q, and that was 1,142. This year we don't have that. And then VGT actually paid in September. It was 200 and something, not even worth opening. This year it was in October. That's why this is a blank. And then VMFXX, this year we had it, so I hadn't moved it yet. And you can see that last year was at 386. This year's 289 plus high yield savings that we mostly didn't have last year. So roughly the same cash when you add them up. Voo, the wife's 401k gave us a nice little bump. Last year was 1,267 compared to 1,487 this year. Love that. QQQI, okay, there's the difference. Now this is actually pretty nice here because QQQI and GPIC down here pay on a staggered schedule. So I waited to get the dividend from GPIC when I knew I wanted all QQQI after the tax research. It's all return of capital, whereas GPIC is not a lot of return of capital. But I waited to get that 1321, and then after the dividend, I sold GPIC, put it into QQQI, which is later in the month, so I got the full amount, you can see, over double here of QQQI. So I really worked the cash flow nice this month. And now I don't have GPIC. That was a one-time thing on the initial split. And then the HODL factory, my individual stocks, went from $4.42 in 23 to $10 last year in this month to $18.84. I love to see that progress. And when we zoom out, we can see that 2025 has already surpassed 2024 in total dividends. And we have a big month coming, December, with SCHD and friends. And then we also have a couple pretty big months because QQQI will always be at least 3K a month, I would think. So this one's going to get quite a bit higher than 2024, and 2026 next year is going to obliterate the field. It's going to be pouring dividends for the foreseeable future. Now let's pull it all together and see where we're heading next. Stay balanced. We're hitting record highs. Cash is flowing in and dividends are piling up. And honestly, life feels great right now. But the best part? We're doing it while living authentically and choosing happiness along the way. It's easy to stay positive when everything's heading up. The real test will come when the market takes a dive. And it will eventually. When that happens, remember this. Every dip means that you're getting more shares for every dollar you invest in the market. So stay positive, stay focused, and above all else, stay a buyer. Don't let the noise pull you off track. Ignore the Joneses, ignore the clickbait headlines, and keep feeding your system. Time is limited, and you have complete control of how you spend it. Build a life that is based around your true desires and how you feel, and not one that a stranger will appreciate. That's what staying balanced is all about. And speaking of well-balanced superstars, a huge shout out to my members making these videos possible. Their names are on the screen now and I appreciate each and every one. If you like what I'm doing here and want to show this extra level of support like these folks, feel free to join the channel membership. And before we go, a quick shout out to my two favorite investing tools, Seeking Alpha and Snowball Analytics. I use both to make videos like this, track my portfolio, and do all my research. And I have a link for my affiliate link pinned in the comment below. Not a sponsor, but something I highly recommend. You use that link, you most importantly save yourself money on the great product, and it also gives me a little kickback. And also check out one of these two videos to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you in the next one. Peace.